Well, Marc Faber, publisher of the Doom, Boom and Gloom report, foresaw a rally in the US in March 2009. The S&P 500 began a 91% advance after he said stocks would prove profitable. Well, now he's saying stocks are expensive, predicting that the same index could shed as much as 10%. And the correction may be even more severe in developing economies, which have risen by 134% since Faber predicted the S&P rally. Well, Faber predicts that equities in emerging markets could be set for a 30% drop. And he joins me now live from the Russia Forum in Moscow. Thank you very much for joining us today. Can you tell me a little bit about
my pleasure.
About the reasons behind your concerns over emerging markets right now? Is it all about inflation?
Well, I think it depends a little bit on which emerging economy you're talking about. But in general, in Asia, we had huge moves over the last 18 months, and the markets became very overbought, and there was a lot of enthusiasm, a lot of foreign money inflows. And I think we have now everywhere inflationary pressures in these markets. And the moment something like Egypt happens, people have second thoughts about investing in emerging economies. And so the money flows rather back to the developed markets. And that's why I think for the next 3 months, the US may outperform emerging economies, stock markets.
No, this is something that you see as a temporary correction, is it? You say just for the next 3 months?
Yes. I mean, we never know whether a correction is the beginning of something more serious or whether it's just a correction in a bull market. My impression is that we have a lot of pressure on commodity prices on the upside, in particular oil. I think oil is likely to move higher for a variety of reasons, and that may not be very good for stock markets. Now, if they do correct, and the indices may correct less than individual stocks, because, say, you look at the Dow Jones or the S&P, the energy component is very large, so theoretically the energy stocks could rise and offset weakness in other sectors of the market. But in general, I think I would be a little bit careful at this stage. We had a big move, and I would take some money off the table. I'm not yet shorting the markets, but I think we will see a lot of downside volatility this year.
Now, looking at Russia specifically, as you are there, it does face some of its own issues, doesn't it?
Well, now that I'm in Russia, I have to be optimistic about Russia. But joke aside, I think that the Russian market is an unappreciated market because the Western media has no clue about Russia, and they always write very negative articles about the political system here, the corruption, when the corruption in Europe and in the US is about as bad as it is here or anywhere else in the world. But the market here, at least, is very inexpensive, and it's a resource-based stock market. And technically, I think the market is going to break out on the upside right now and move up at least 10%.
Now, what about the recovery in the US? We've seen pretty positive data out of there, and of course we've got QE2 with a lot more money there. Longer term, how is that going to work?
Well, I think we may have, and I've written about this, a crack-up boom that is driven by ultra-expansionary monetary policies. I mean, interest rates at 0% on the Fed fund rate is significantly below the rate of inflation, and that can drive the economy for a while. So you have a crack-up boom, but it's not sustainable economic growth, and this crack-up boom will be followed by a big setback sometimes in the second half of 2011 or maybe next year, but there will be another crisis on the horizon.
And just before we go to look at what's happening in Europe, the sovereign debt crisis seems to have gone away a little bit for now. Are we kidding ourselves if we think it's over?
Yes. Yes. I think in 2008, 2009, the financial sector essentially went bust, and now the governments are in a much worse financial position. Next station will be when governments will go bust. The debt level is not sustainable, and I think that this will happen. The question is, with monetary policy, you can postpone the final crisis for quite some time. You first can create a lot of inflation and hide the debt problems through inflation, but eventually it will come back.
And just before we go, commodities are something that a lot of people are focusing on at the moment. We've got the oil price obviously rising with events in the Middle East. Are commodities a good bet at the moment overall?
Well, I think if you look at long-term trends of commodity prices, occasionally they spike up, but the spikes are of brief duration. In other words, you could have copper shooting up first and then sometimes this year breaking down. And that's essentially what I'm afraid of for the global economy. I think for a while we have this crack-up boom, and what then happens is either we have a problem in China or commodity prices implode or something bad happens, and then we have again significant downside volatility. That's why I'm advising to take some money off the table.
Okay, Marc Faber in Moscow, thank you very much for joining us.